I've run a lot of companies in the past in every sector you can imagine, and I've never had the opportunity. And sometimes I guess this sometimes can feel like a curse as well, but I've never had the opportunity to run a company essentially almost like in a reality show.
Right.
Essentially 24/7, you are under the light, literally, in the spotlight, and people can ask you questions anytime they want. They have constant access. And, initially that was pretty difficult. It was hard because, as a CEO of a company, you have a fiduciary responsibility normally to your shareholders. And then secondly, to your clients. And then, depending on what type of company you have other fiduciary responsibilities. Here, though, especially in a tokenized entity, I have fiduciary responsibilities not only to shareholders, but to token holders. And on top of that, obviously, clients. And most of our clients are token holders. And then we have this aspect of community. And so, I got to be honest, initially it was difficult to figure out how to prioritize between those very different and very important sectors of our business. But at the end of the day, we've, I think, adjusted to the point where community has become such a massive aspect of our business. Our investors are now part of our community. Obviously, our clients are part of our community. We have people that aren't clients that are part of our community. And it really gives us this massive springboard where we can be just ultra transparent and ultra honest, ask questions, get feedback, understand, look, is this something you want? Does this work for you? Why doesn't it work for you? And it's really allowed us to fine tune not only our product base and the services we offer, but it's given us the ability to kind of, I guess, be a better company. Because when you do something wrong, you don't have to wait for a board meeting to talk to an investor to let them know you did something wrong. You're going to find out about it immediately and in mass. And I think now, if you ask me whether that's good or bad, I would say it's huge and it's good. It's massive, and it's probably one of the best things we've built in terms of a company is our community.
So Kevin, it's great to meet you. Thank you so much for taking time to speak to us.
Thank you very much for the invite.
All right, let's start. Just tell us a little bit about yourself. Tell us who you are and what it is that you do.
Sure. So my name is Kevin Murcko. I'm CEO at Coinmetro. I have about 20 years of experience in traditional finance, mainly through the FX or foreign exchange sector. And around 2014, in that business, in the FX business, I started to get asked a lot of questions about Bitcoin. And personally, I have been mining Bitcoin since 2009 on an iMac in the corner of my office. So I had a lot of experience already. I was in the Bitcoin Talk forum when the famous Laszlo pizza transaction happened. So I was pretty much embedded in the community. Though on the business side, I wasn't doing much. So I was very involved in FX. That took up a lot of, or most of my time. And so I didn't have a lot of time really to spend on the business side of crypto until roughly 2014. Clients started asking me, look, can we get exposure to Bitcoin? And that seemed like a pretty simple thing, or a simple question, I should say, which I thought might have a simple answer. And so I started to delve into where liquidity was in Bitcoin, how I could possibly connect to APIs or some form of electronic connection to be able to offer liquidity to my clients in the FX space. And well, it was impossible. So what was available at the time just wasn't up to par to offer to any type of client base, retail, institutional, or otherwise. And so that kind of started my journey on the business side. And fast forward to 2017, Coinmetro kind of became a thing. We did our ICO. On the back of my experience in retail, it was kind of the perfect place that I thought I could get my toes wet inside of crypto. Was also servicing the retail market.
Right. Okay. So just for those who might not know, tell us about Coinmetro's value proposition and specifically tell us what problem it's solving in the market.
Absolutely. So like every retail market, there is a litany of problems in crypto when it comes to retail. And the main reason for that is, well, retail traders and retail investors are usually underserviced. We talk a lot about non-banked people around the world or underbanked. Well, in most retail sectors, whether you be an investor, whether you be a trader, you are underserviced 100%. That comes from a lot of different angles. So for Coinmetro, our main mission here, or our vision, is to take modern financial solutions and combine those with the power of community to just make sure that everyone everywhere has access to those life-changing opportunities that generally don't cross your path when you're a retail investor or trader. And so where those problems lie, well, transparency is a big one. You don't get a lot of information. It's hard to get that information. You have to deal with maybe counterparties that you don't necessarily know, that don't know you. Complex trading solutions or complex investing solutions with really tough UI. I think crypto still suffers, from an issue with just complex user interfaces. It can be the learning curve to get into crypto for most people is, substantial. It can be difficult for people to understand. So what we do here is we make sure, one, that there is transparency. We have 24/7 customer support as well to make sure that that journey through, crypto or just into finance in general is an easy one. Mm-hmm. They speak your language. We have a 4.8 rating on Trustpilot, which I believe is the highest in the industry for that same reason. Mm-hmm. And we make sure that that UI, that complex kind of interface, is just brought down to a level where everyone can understand. And if you don't understand it, you got 24/7 customer support standing by to make sure that you do. It's just a different approach. I think we're very pro-regulation. We've been pro-regulation since 2017. And when I say pro-regulation, I don't mean we like all regulation. I don't mean that we stand by, legislators and regulators and give them a thumbs up every time they make a decision. But we like to try and change things from the inside. I think we need dynamic regulation. I think we need specific regulation for specific pieces of our ecosystem. The only way to really get that done is to do that from the inside and help legislators and regulators understand what our position is so we can better help our clients.
Right, okay. I'd like to just take a step back, and perhaps for those who might not understand much about crypto economies, if I understand correctly, Coinmetro is a crypto exchange, right?
That's one piece of it, sure. I think that's the easiest way to describe us, though. In reality, there's a lot more under the hood, as one would say.
Right, okay, and I think we'll get to that in a minute, but let's just lay the foundation. Tell us, what is a crypto exchange and why do we need them?
Sure. So you can think of, in many ways, a crypto exchange as kind of the bank for the new alternative financial system. Mm-hmm. And so when you think of a bank, you think of a place that you can put money, invest money, potentially receive additional services, not even tied to the money you have in your bank. Could be, insurance, could be things like, other types of investments outside of the general scope of what the bank offers, etc. But the bank is kind of a conduit. It is a gatekeeper. It is a door into the financial ecosystem, right? Normally, if you don't have a bank account, you can't really transact. If you want, whether it comes to pay your bills, whether it comes to, actually travel and be able to pay money in other countries, without having that bank, you're kind of stuck and you're outside of the financial ecosystem. And so exchanges are very much the same thing for the crypto ecosystem, for this new age financial ecosystem. We essentially allow you to move between different assets, whether that be what we like to call in industry fiat, not the car, but fiat, in case you don't know, actually means by decree. Yeah. So it's simply money that has its value because it's given to it by decree. Someone says this piece of paper is worth $1, €1, £1. Actually, there's no £1 notes, but you get my point. Yep. At the end of the day, it just means that someone put the power behind that piece of paper or that coin. And so you can take those paper notes or those coins and you can transfer them into digital assets, whether that be Bitcoin, Ethereum, or a myriad of other assets. And so that's the general idea of an exchange. You're exchanging one thing for another. However, on the back of that, we also give access, like banks do, to this whole new ecosystem, this whole new financial ecosystem that allows you to kind of profit from many different things inside of the crypto space. Right. Okay. So we've seen an increase in exchanges over the past several years. I think we have something like 500 and upwards globally. You've already mentioned that Coinmetro's focuses on transparency, on customer support with 24/7 availability. That you're keen on regulation. Tell us, why else would customers choose to use Coinmetro as opposed to any of the other exchanges? Well, back in my FX days, we'd get similar questions, and the businesses are very similar. So I'm going to give you a bit of an analogy back in those days. So there was a very similar push with FX that there is in crypto in terms of regulation, in terms of understanding of retail clients, in terms of how people got involved in the market and kind of what they did inside that market, i.e. trading currencies. And in the late 1990s, the market was unregulated, very similar to where crypto was just a few years ago, almost no regulation. At that time, a lot of regulators went around and said, this is a very difficult market, you shouldn't get into it, there's a lot of fraud, there's a lot of scams. They basically tried to stop the retail public from getting involved in currency trading. Mm-hmm. Fast forward a few years, regulation came in because they realized that, they're not going to stop with just a few words on a screen. They're not going to stop people from investing or trading. And so regulation came out, regulated the industry. We were in a very similar place a few years ago in crypto where there was no regulation. And while like I said, we are pro-regulation, but I'm also, and have been, and was a retail trader and have been a trader for many, many years, going on over 2 decades. And so I understand the retail trader plight. And that plight is, and even more so with the spotlight of crypto. In crypto, a lot of crypto traders, crypto investors assumed that regulation would be a bad thing for the market, i.e. that it would cause some type of ripple in the market that would not allow them to get access to certain things, that would potentially block them from getting involved in certain opportunities. And while that could be true, meaning that could be an eventuality if market players like Coinmetro weren't involved to make sure that regulation was a bit smarter this time around, what regulation does do is it helps you understand where you should be putting your money, what partners you should be using. It provides some form of transparency, and it also provides some form of just a trust mechanism. So you know that if a company is doing the right thing, more than likely, that's going to be someone you're going to want to partner with. And so I think when you look around at those 500 plus exchanges, or how many still exist, one, I would say that if you look about how many banks there are in the world, there's way more than 500. And I think what we need to also understand is that as this economy grows, as this digital economy grows, as the crypto market in general matures and we get more mature assets and more mature companies creating assets, we're going to need a lot of places where people can onboard into and also transact inside of this ecosystem. So while I don't think 500 is a lot, I think generally right now with our rate of adoption and just the lack of overall regulation, we're going to see a lot of those 500 go away. And for very simple reasons, and like you said, I already touched on in the previous question, and that's, one is transparency. When you're moving funds, especially digitally, and you're going into a market you don't understand, a niche market, it's going to be, you need someone to talk to. You need someone you can bounce questions off of. Someone has to be there. You need to understand what's going on. And the vast majority of platforms simply don't put the client first, right? They put their business first, and the client becomes second. Even some of the biggest names in crypto, if you read stories from 2017, 18, 19, 20, 21, when we were into bull markets and there were lots of new clients flooding the market, people were waiting months for an answer, months. Even if the question was as simple as, how do I open an account at your exchange? How do I open an account? How do I service my account? How do I deposit funds? Months waiting for an answer. And that's just unacceptable. So I think, Coinmetro positions itself in a pretty unique way. And I think that is, when you come into crypto for the first time, you're probably going to end up at a bigger name, right? Whether that be a very well-known name like Coinbase, for example, that operates globally. They do a lot of money to churn clients in and out. What that means is a lot of clients come in and they're upset for some reason and they go somewhere else. And they look for something that's going to solve a problem they still have. And some of those problems are going to be UX related, UI, UX, like I already talked about, which is just their inability to understand how to navigate the platform. Some of those are going to be because they just don't get the support they need. And others are going to be because they just don't feel part of something. And I think especially with new generations, I have 3 daughters that range from 11 to 27. And each one of those sits almost all of them are in a different generation. And at the end of the day, you can see the vast difference between how younger generations start to view how they interact with companies. They want to feel like they're a part of something. They want to feel like there is some form of community. They want to belong to something. And we put a massive amount of focus on community. It's helped us build our business to where it is now. It's going to help us build it to the next level and the level after that. And it means that we listen and we understand what our clients need and want, and we build based on that. And I think that connection to our client, the ease in operation that you have with the UI and UX, and the fact that we're available and transparent separates us from almost everybody else.
Right. Okay, let's. I want to be a bit provocative now, because we see a lot of solutions coming into the market that are enabling native settlement of crypto payments. And one could say that perhaps that's bypassing the need for an exchange. So in your view, how sustainable is the exchange business model?
I think the exchange business model isn't going anywhere. And I think at the end of the day, when we talk about exchange, like I mentioned in a previous question, I talked about how a bank is very similar to an exchange. Now, not every exchange offers the same type of services a bank does. In fact, no exchange offers all services a bank does currently. However, I think what's happening with exchanges, you're starting to see a multifaceted approach. When it comes to Coinmetro, it's not just about the exchange from one asset to another. It's about giving ease of access into what DeFi, decentralized finance, which for most people, when we talk about learning curve, that's off the charts. Now, DeFi has a lot of really cool things about it. One, obviously, being decentralization. Decentralization is going to make large changes across traditional finance as well as in this industry that we're sitting in. Mm-hmm. However, decentralization in many ways hinders one's ability sometimes to access something. And that sounds crazy, but the reality is that decentralization comes with its own cons. And it has a lot of pros, but it also has cons. What we do is we create a gateway. We create a gateway, a centralized gateway, an easy gateway for people to gain access to a hybrid market, meaning it's a hybrid between decentralized and centralized services. And those can be things like passive income products. Those can be things like quasi-banking products and other things. Now, when it comes to payments, if you look at the payment space now in traditional finance, there's a myriad of options. You obviously have credit cards, you have instantaneous transfers from banks, you have micro payments that come off people's phones, etc. Mm-hmm. That hasn't stopped banks from expanding. That hasn't stopped banks or multifaceted infrastructures from being able to thrive in the market. So I think what we're going to see over the next probably 5 to 10 years is a hybrid model is going to come to life. You're going to see truly decentralized products that can operate in a regulated environment, mm-hmm. that maybe have some portions of their infrastructure centralized, but very small portions. But the vast amount of their infrastructure is decentralized, and payments is probably going to be one of those things. However, when you talk about true decentralization, you're leaving out the fiat or the cash element, because mm-hmm. cash can be decentralized. Yeah. So there's going to have to be always those gatekeepers that allow people into that market. And there's also going to be a need for education. There's going to be a need for community. There's going to be a need for people, a place where people can get help. And decentralization doesn't provide any of those things. And so I think we're going to work together to create what I would call a hybrid model, where there is kind of centralized order books and other pieces, maybe centralized KYC, know your client. Those things are going to remain centralized, and you're going to need a gatekeeper to actually go through those different processes. And then you're going to have decentralized elements. And we're already working on that hybrid model. We already have hybrid products, and I do think that's the future for this market.
All right, you've touched on the aspect of community a few times in our conversation so far. I'm intrigued to find out more about it. Tell me what's the role that community plays in the value proposition of Coinmetro?
I think it plays a role almost in everything we do. And so, I've run a lot of companies in the past in every sector you can imagine, and I've never had the opportunity. And sometimes I guess this sometimes can feel like a curse as well, but I've never had the opportunity to run a company essentially almost like in a reality show. Right. Essentially 24/7, you are under the light, literally, in the spotlight, and people can ask you questions anytime they want. They have constant access. And, initially that was pretty difficult. It was hard because, as a CEO of a company, you have a fiduciary responsibility normally to your shareholders. Mm-hmm. And then secondly, to your clients. And then, depending on what type of company you have other fiduciary responsibilities. Here, though, especially in a tokenized entity, I have fiduciary responsibilities not only to shareholders, but to token holders. And on top of that, obviously, clients. And most of our clients are token holders. Mm-hmm. And then we have this aspect of community. And so, I got to be honest, initially it was difficult to figure out how to prioritize between those very different and very important sectors of our business. But at the end of the day, we've, I think, adjusted to the point where community has become such a massive aspect of our business. Our investors are now part of our community. Obviously, our clients are part of our community. We have people that aren't clients that are part of our community. And it really gives us this massive springboard where we can be just ultra transparent and ultra honest, ask questions, get feedback, understand, look, is this something you want? Does this work for you? Why doesn't it work for you? It's almost like having, it's almost like constantly being able to just jump in to someone's home, virtually, and just ask them while they're using the product. How's that look? Do you like that? Does that work for you? Is that too difficult? Do you understand the process? And it's really allowed us to fine tune not only our product base and the services we offer, but it's given us the ability to kind of, I guess, be a better company, because when you do something wrong, you don't have to wait for a board meeting to talk to an investor to let them know you did something wrong. You're going to find out about it immediately and in mass. And I think now, if you ask me whether that's good or bad, I would say it's huge and it's good. It's massive, and it's probably one of the best things we've built in terms of a company is our community.
Yeah, I think you're right, because just thinking about it, almost no financial service institution has a community per se. They have clients, and that's it, right? I think with the exception perhaps of Monzo, which one of the neobanks in the UK that have successfully managed to build a community of users, this is really quite revolutionary for the industry.
Absolutely. And like I said, I know the reasons why they don't. Because to me, it was scary. I was pretty scared. I was like, well, I don't know how this is going to work. Because, having even worked in customer service. I mean, when my FX brokerage launched all those years ago, it was me and one other guy. And we did everything from, accounting to customer service to, you can name it. And customer service is a tough job, man. I tip my hat to everybody out there that works in customer service. It's not easy.
Yeah.
And so it was a scary proposition, but I got to tell you that I think every company, especially as the thing I touched on earlier, which is just generationally speaking, the new generations want to feel like they're a part of something. They don't want to invest or transact with something that's just there to be there, that's there to just make money, that's there to they want to feel a part of something. They want to make change. They want to, actually affect change. And so I think every company is going to go down this path. It's going to take some time for that adoption to happen, but I think everyone's going to head down this path. More open community.
That's very exciting. Now, we often hear that perhaps the main concerns that customers have about exchanges are the fees, the issue with liquidity and security. So can you briefly tell us how does Coinmetro address these concerns?
Absolutely. So when it comes to fees, we have some of the lowest fees in the industry, and we always have. We didn't have to grow to lower our fees. We started out as highly competitive, comparatively speaking, to anybody else in the market. And the way we do that, obviously, is that we find services that we know our clients are going to need, and we find multiple services that we know our clients are going to need. How do we know? Well, we ask them. And this way, we're not just making money on one service, i.e. exchange. We're making money now, lowest fees in the industry or close to it in every product we offer. But we're able to offer multiple services that most of our clients take advantage of. So we're able to offer those low fees. And our goal is similar to what Amazon's goal was, 20 years ago, was that as they grow, fees get lower, not higher. And that's our goal as well. We want to incentivize clients to do well, not incentivize them to, essentially to lose money or push them down a path that makes them lose money. Happy clients means a happy business. And so we always put our clients first. When it comes to liquidity, liquidity is an interesting thing in crypto. I come from what is supposedly the most liquid market in the world, FX. Now, I did a video about 4 or 5, more than that now, maybe 10 years ago about liquidity and FX. And I'll give you a 30-second rundown of what that video was, because I think it plays really nice to this question. Essentially, at the time, it was said that $5 trillion a day were transacted in FX. And that sounds like a massive figure. So when you hear that, you're like, well, yes, that's definitely very liquid. But when you think about that, 80% of that liquidity sits on one pricing pair, that's the euro dollar. And in terms of ticks, meaning changes in price, there's up to 120 a second. When you do the math at 120 a second, over the course of 24 hours and 80% flowing into one asset, that means even in that most liquid asset, it's only $80,000 per tick. And when you break it down to the other 100 or so assets or asset pairs that exist, it's not very liquid. And so I'll take that into crypto now, which is on the face of it, a very illiquid market. Now, what most exchanges do is they market make inside of their own order books, meaning that they apply liquidity. Whether that liquidity is quote unquote available or not, that liquidity sits in the book and allows for transactions to happen inside of that liquidity. And essentially on the other side, that exchange is off placing that risk somewhere else. So they're whether that be through futures or options or just directly into somebody else's spot order book, they're essentially taking your trade, they're taking the other side of it, and then they're trading against you somewhere else. And while that's not a bad thing per se, it goes against kind of the modus operandi that I always thought that I wanted to follow in retail. And that's, I don't want to do anything that's potentially in contrast to what I want for my client. So we don't trade against our clients. And that makes the business for us of finding liquidity even more difficult. We work with some amazing liquidity providers. I would say that you need to remember as well that liquidity and volume are not the same thing. And so when newcomers come to the market, they may see low volume on an asset and assume it means low liquidity. Not exactly. When market makers generally work on an asset, you can think of them like credit cards. If you've ever, I'm sure most people listening have had a credit card at some point in their life or have 20 of them right now sitting in their wallet, hopefully not maxed out.
Right.
And so when it comes to credit, if you have a credit card with a limit of say 5,000 and you don't use it, What normally happens is the credit company will come in at one point, a year later, 2 years later, and say, we've lowered your limit to 2,500 because they only have a certain amount of credit they're willing to give. And if you're not using it, they don't make money. It doesn't make any sense for them to give it to you. And so with liquidity provision, it's the same thing. It's dynamic, meaning if there's low volume on an asset, there's going to be a low amount of available liquidity at that initial price, because a market maker or a liquidity provider doesn't want to put too much credit into the book if no one's using it. But as it gets used, it expands. So it's dynamic. So I just want to throw that out there as well. So how we deal with liquidity problem is that we deal with regulated liquidity providers, ones that I've dealt with for years in the FX market that have now transitioned to crypto as well, and also liquidity aggregators that are also regulated, that bring liquidity in from multiple providers and allow us to pass orders off into that much larger liquidity pool. And yeah, at the end of the day, as this market grows, we're going to see liquidity grow as well. That's obviously inevitable. But right now, where you see the most liquidity, quote unquote liquidity of the market, is generally that company simply providing in mass their own liquidity in the book. And again, like I said, I'm not saying there's anything wrong with that. In fact, it's the business model that most banks use when they price anything, whether it be equities, whether it be bonds, whether it be FX and foreign currencies. So it's fine. You need market makers to make a market. But in terms of ethics, for Coinmetro, it's something that we just don't do. We don't want to make money when our clients lose. Simple as that.
Now, let me ask you, you're incorporated in Estonia, that's right?
That's correct, yeah.
So I'm curious to know why do you choose to incorporate your company in Estonia, and specifically, how do you deal with challenges that might exist with regards to access to talent? Because we know that Estonia is a small country. So how do you go about dealing with those challenges?
Sure. So you said it's a small country. That's actually one of the reasons, small countries that are well governed tend to be progressive because they have to be. If you're a small country and you don't have a major industry, you need to do something to make sure that you could be prosperous. And so Estonia, when I was looking for regulation back in 2017, I wanted to start this business under some regulatory umbrella. I absolutely did not want to go into this world of exemptions or, no regulation, because from my experience, now, while it might take a long time for this kind of risk to emerge, there's a major risk in that eventually, your kind of prior crimes come to haunt you, basically, right? So when you do things that you shouldn't be doing, even if there isn't a specific regulation, eventually those things come to light, and it's going to hurt the business. Even if you operated, ethically and honestly, unfortunately, it's still going to be difficult when regulation comes if you're unregulated. So looking for a regulated point in the world, there was only a few locations. There was Japan. But to be very honest, I don't speak Japanese, I've never, I've been to Japan, but I have no roots there. I don't really understand the culture as much as I probably should. And so at the end of the day, it didn't make much sense for us. Also considering that, businesses regulated in Japan get regulated in Japan to service the Japanese market. You don't go to Japan to service Asia Pacific or Asia in general, or Europe for that matter. You go there to serve Japan. So, and the only player in the European market that had a license at the end of 2017 was Estonia. So Estonia took what was then AMLD5, it hadn't even been fully redacted yet. So it wasn't even law at that point. They took one of the readings and went ahead and made a licensing structure based on the AML law. So they created through their AML Act, and they created a licensing structure for crypto. And I said, well, that's a great place to start that. I think that makes sense. So I had previously thought Georgia, and for those in the US, that would be the country.
The country, yeah.
And so I went to Georgia and thought, this is a nice kind of Eurasian, middle between Europe and Asia. It might make perfect sense for us. Unfortunately, things didn't work out. Very quickly, I understood that Georgia probably wasn't going to be the right stepping stone for us. I had read a story about Estonia that in November 27, 2017, they passed these licenses. And so I got on a plane from Georgia, ended up in Estonia. It was January 28, 2018. Got off the plane. Within 2 days, had hired my first employee. Within 4 days or 5 days, already had some office space. By my 7th day there, I literally got a private tour of the Prime Minister's office. And on some off chance, I like to say that in Estonia, in the world, they say there's 7 degrees of separation. In Estonia, there's 1.
Right.
So, if you need to speak to someone, it's literally just asking one person you may know, and you'll eventually get to the person you need to speak to. And that's amazing. I've talked to the regulators. My initial talks to the regulators were my second or third week in Estonia. I asked a colleague of mine, a friend of mine that I had met, said, look, do you know how I can possibly get in to have a chat, with the FSA or the FIU, et cetera, the different regulators in the country? I said, yeah, sure. I think I can get you a meeting. And with a phone call, I had a meeting with the FSA that same day, 2 p.m. And so that's amazing. I mean, if you've ever dealt with regulators, and I've dealt with dozens and dozens, that just doesn't happen. The small country or no small country, it just doesn't happen. And so that was amazing. Plus, obviously, Estonia, its history with unicorns, most unicorns per capita in the world. Also an amazing story, great narrative. The government has been very supportive. We've also been there to help out, the government when they had their first licensing efforts. We told them they needed to do more. We helped them redact their second revision of the licensing. Now they're in their third revision, and I think at this point, it's probably some of the most comprehensive regulation in Europe. In comparison, Netherlands might be close to being on the same level, but outside of that, and I guess Germany, because Germany has always adapted. BaFin basically used existing regulations, so it was quite comprehensive. But in terms of new regulations specifically for crypto, I think Estonia is number one or tied for number one in the EU. So they've done a good job. It took them a bit to get to that point, but they've done a good job at making sure that they're doing everything they can to make sure this market progresses.
Yeah, I think that's incredibly counterintuitive, because what you're saying basically is that Estonia's small size is actually a competitive advantage, and so is its stringent regulatory environment. You're not the first company I've heard has actually relocated to Estonia because they were looking for the most stringent regulation around crypto, because that validates their business model, right?
Correct. You can't, at the end of the day, regulation is needed, right? Mm-hmm. We need regulation to make sure that this market is clean, that operators are doing the right thing. We also need to protect clients. And without regulation, insurance is not going to mature in crypto, which means that at the end of the day, if something happens to an exchange, there might not be coverage. And so, regulation brings in a lot of things. It brings in banking rails. It allows us to do business outside of our own sector and bring in additional clients. It allows many, many things that unregulated industries just don't have. And so regulation is of utmost importance because of that. Now, having said that, we need to be involved in regulation. To make a change, to try and get regulators to understand the intricacy of this market, to try to make them understand how you really can mitigate risk, to make them understand that it's not the same as any other market that's ever existed because of how dynamic assets can be. They can be one thing today and one thing tomorrow. They can be traded like one thing and they can be bought and sold like another. And so in order to do that, if you try to do that from the outside, meaning just, yelling loudly from being unregulated, you're not going to get listened to. And so you need to be part of that movement. And, I would say to every operator out there that wants to maintain their business and do well by their clients, you need to proactively look for regulation rather than run away from it. And when it comes to size, it is a bit counterintuitive. But I would equate that to many other things in life. Sometimes it's not about quantity, it's about quality. Mm-hmm. And most times that's the case. And I think because of the fact that there's not a lot of quantity in Estonia, they have to focus on quality. The talent pool here is exceptional for the size of the country. Mm-hmm. Also something that was quite surprising to me. Not that I expected, that there'd be no talent in the country, but I've been to cities with 1.3 million people, and the talent pool was, weak. Yeah. And here we're talking about a country with 1.3 million people, but actually a quite exceptional talent pool. And that's also something that surprised me, at least when I arrived to this country.
Mm-hmm. Now that's incredibly insightful. So I appreciate you sharing that. Let's just close. Tell us a little bit about your vision for Coinmetro, and specifically, I'd like to know what role do you expect it to play in the financial services ecosystem within, let's say, the next 5 years.
Sure. So, I think, our vision, our mission, et cetera, has never really changed. Sometimes you change a few words on a page because, you want to make it sound a bit better, to outwardly to people. But at the end of the day, the mission's always been the same. Mm-hmm. The retail customers generally get the short end of the stick. And when I say retail, I mean pretty much everybody in the world except, the 1% of people working for institutions. And that has to change. For the world to progress, for us to move away from all the wrongs that currently exist inside of traditional finance, we need to change that. And we're trying to spearhead that change. We're not the only company trying to spearhead that change, but there's only a few of us, I think, in this industry that truly want to make that change. I see a lot of companies now doing the same things against their clients, and the same things that generally people don't like or don't care for in traditional finance now in crypto. And I think that's just the wrong way to go about it. So, our goal over the next years is to make sure that one, regulation becomes smarter, becomes cleaner, not only works to protect clients, not only works to protect their interests, but also works to make sure they don't lose access to opportunity. Barring someone from investing in something because you think they're not smart enough to understand the risk actually induces risk. And I think that needs to be pushed through, and we need, smart people to help push that narrative through to make sure that the regulation does become different and dynamic. And so that's definitely something that I see in our future. I also see that over the course, we're going to become something of, I guess, like a bank ourselves. I hate to use that word because I think bank is almost a dirty word now in our society. Nobody likes banks. But for the lack of a better word to really understand kind of the dynamics here, we're talking about a multifaceted system where, whatever you need to do in terms of finance, whether that be buy and sell something, whether that be pay for something, whether that be receive money, send money, whether that be invest, whether that be receive passive income, you name it, all those things can happen on a platform. And even if you're not crypto savvy, it gets to the point, if you can, and this is a bit of a US reference because that's where I grew up, but when I grew up, AOL, I wasn't old, but I wasn't a kid really. But when AOL came onto the scene, right, I was on the internet already for a few years. Basically connecting to baud modems and that stupid sound you used to hear, 20 minutes while you tried to connect. I was already, but my mother wasn't on the internet. My grandmother wasn't on the internet. Nobody's grandmother was on the internet. Well, maybe somebody's was, but definitely not mine. And so what happened is now people use the internet without even knowing they're using the internet. They just pick up their phone, they click on an icon, they're using the internet. It's you don't have to think. And that's where we're going to go with crypto. And so you may interact with our platform in 5 years and think or just know that you're taking your paycheck and you're paying a bill in maybe even another country. And it's easy for you. You just click a button. On the backside, though, blockchain and crypto and digital assets are all being used to transact that in real time for next to no money. And I think that's where we're headed. We're headed to all we want to do, the simple task that we want to handle here is that we want to make finance accessible and easy to use. The crypto element is the cool, nuanced guy on the block. And we love crypto and we're going to support it. But at the end of the day, there's always going to be something new and nuanced. And the goal here is to have a fintech platform that supports that new and nuanced without you needing to understand how to use that new and nuanced piece of technology. That's the idea. And so I see us as kind of, I don't know if something exists like a Coinmetro in 5 years right now. I think we're going to see a big change to how people interact with their finances, with their money. But I guess the easiest way I can compare it is kind of something like a bank that you actually don't hate to talk to or communicate with. I guess is the best way I can describe it.
Kevin, it's really, really fascinating listening to you. Thank you so much for spending time with us.
You're very welcome. Thanks for the invite. Appreciate it.